Good morning and welcome to the Early Bird. And just before we start, I just wanted to mention that we sent an email out that we're using the GFT platform, and one of the reasons for that simply is that, as you know, we've been, for the people that have been here for a while, we've been this year we've been running the robo method. And it's been doing okay, you know. So what I wanted to try and do was to find a platform that would enable us to set the order, basically set the orders and forget them. And as much as I like DMA platforms, their ordering system is rather clunky, and then some of the other providers like CMC, which I don't recommend, don't allow you to buy above the market. So the GFT platform sort of, with the ordering system, allows you to scale out, to have a long order and a short order at the same time above and below the market bars that we use the robo for. So the ordering system is good. The charting systems, the charting program seems quite good. Service is great. The data feed for the local market is the same as they're using for DMA, which is the Thomson Reuters data feed. So yeah, and the margins themselves are quite good too. It's 5% on the sort of majors, which is cheaper than CMC's. So yeah, all in all, I can't really fault it. As we sort of all use it, then people will be sending in the good and the bad and the ugly, and we'll look at those. But as a bit of a group, we have a bit of power in asking for certain things in terms of changes within the platform and other bits and pieces. And if you have any problems with them, then just let me know, and I'll approach them from this end, because as a group, you know, as a sort of a larger client group, we have a bit of sway, and it can be sort of helpful in many ways. So any problems, let us know. And they've also given us the interface for the demo account. So if you'd like a demo account, just let me know. I should put the link on the website. I'll do that. But it does allow us to, if you want more money put into the demo account, or you want the time extended on the demo account, just let me know, and I can just go in and change that for you. So it's a bit of a hassle-free practicing sort of thing. So anyway, we'll see how we go with it, and yeah, it's all good. Now, back into business here. The markets have obviously really fallen out of bed, and we're just sort of tracking their wave count to the downside. The Dow Jones, once that's 11,500 here. That figure probably doesn't mean much to many people, but to me it's a medium level. And once the market finds that as resistance, it will have some sort of correction here. But once it finds it as resistance and basically lets go of it, then it really opens up the next largest number, which is 10,000. So that's kind of what we'd be looking at. So we could say quite confidently that after the correction at 11,500, if it becomes resistance, then we need to be looking at 10,000 for the Dow Jones, and we can kind of put that in perspective with the wave counts as well here. Just from this little view here, you can see that it's down for one, back for two here. So we're still in the big third wave coming down. It hasn't finished yet, and we'll be talking more about that and relating it to our markets as well. Yes, so just having a look at, I just want to bring up our market, because that's sort of the important point really, because it's what we're sort of mostly trading as such. And one of the first things that we looked at last week was that we're looking at a 61.50 and 61.8 retracement level, which is, this is the 50 here at 4,000 and roughly, and 3,800 here for the 61.8 retracement level in here. So we're kind of looking at those pictures there, and we'll stay with that, and that would be the support coming in from over here as well. But that said, we need to stay with the wave count as well. So with the wave count coming down through here, we're looking at 5 waves, as I mentioned before. Just I know it's a bit messy, but it's kind of my nature, really. so, so we got this wave 1 down through to here, and wave 2 to this point here, and then we're looking down for wave 3 and 4 and 5. But as you can see, that's taking us sort of way down here. So I won't go down there just yet, but we do need to point that out and how we work with that. So in staying with the actual wave count itself, in each one of these waves here, there'll be 5 waves, and then in the third wave there's 5, and in the fifth wave there'll be 5. It's an impulse wave. And so in this third wave here that we're looking at, then we can break that down into 5 waves as well. So that's it, breaking it down there in terms of down for 1 here, back for 2, which would be on this line chart, be that one and that one. And then we're coming down for wave 3 here, then there'll be wave 4, and then there'll be wave 5. So this brings us into the 61.8 retracement level. So we're going to get bounces off the 3.8 here, and then back up to here, a bit like, say, the banking sector that hit 4,800 and went back to 5,000 and then failed from that point. So we'll be looking at that. But what we need to be looking at now is we need to be looking at this 5-wave structure here, this 1, 2, 3, 4, and 5. So it's, while the Dow Jones is doing its thing at 11,500, and also the copper market as well that we'll look at, you'll see that that's going into the support area at the 400 there. So the copper, the base metals, have got a big part to play in our dollar and our markets as well. So they will be finding support, and we'll point that out when we get to that. But it's this 4th wave here that that we're going to be sort of facing. So just because we're looking at this, what's happened here, it doesn't mean we're going to continue getting that. We always get the opposite of what we think, of what we're looking at. So within this structure here, so from this structure coming down here, this wave coming down here, that would have 5 waves in it. This third wave that's coming down here, that would have 5 waves in it as well. So if I just drew that for the sake of it in that area there, that section there, that's move that's coming down through here, that will have 5 waves in it. So this is where I think that we are in most cases. We're in this third wave here. So we're in this big third wave here, then we're in the third wave of this particular structure, and in the third wave of this, we're in the bottom of the third here. So we've got basically the bottom of the third there, we've got the 4th to go, which we're starting into now, and then will be that 5th there. So then that would fit in like that there. So not quite sort of accurate at the moment, but so even once we finish this little this wave down here, we'll have that. It could be like that, I guess. Yeah, like that. And then we could drag that down to there like that. So it'll be something like, so we've got this 4th wave here, then it'll move down, then we've got this bigger 4th wave here. And the problem with the 4th waves is that they're normally quite complicated, especially when you have waves 1 and 2. So this wave 1 down here and wave 2 here, that was really simple. So if that's simple, then in nature, then this would be complex here. So we can expect complexity in this one. And if we're getting complexity here, then we're going to get complexity in this one here. So this is a place here that that we have to be careful in not to lose money. So it's going to be tricky. That's the point. Now, in a lot of our CFD trades to the downside, we have made good money coming down through here. We just got to make sure that we don't lose it through here. We could take 2 views here. We could take the view that we could really tighten our trading ranges up and really tighten them up and go in there and take those profits. That's one thing that we can do, and another thing that we could do is we could stand back and allow this sort of 4th wave to, these 2 4th waves here to play out, and then get the further drift to the downside. The other side of the coin is that we could basically trade less money and reduce our positions into here as well. So there's a variety of things to do. You'll need to think them out for yourself, but I just wanted to point out that what you see here is not what you're going to get through here. People that make money in trends normally give it back into corrections, and so you need to be aware of that. You also need to be aware if you're getting into a market late because the timing's wrong for you, then it will be wrong for you again. Yeah, because you haven't actually you haven't got your thinking right. You need to think in a certain way, and you haven't got that thinking right. So that needs to be sort of put into place, something that you'll need to work on. So, okay, all that said and done, that's all sort of basic stuff, but sometimes we need to go back to basics to pick things up. So the Dow Jones, we've got a little third and fourth wave here that we were looking at yesterday or the other day. We've got 5 little waves here. There's third wave into here, the fourth and the fifth down to here. So we'll be looking for that can come down now to that can come down to here, that down to here. So we'll be looking at this fourth wave here. How complicated it's going to get, not too sure, but we've got that, then we've got down to probably 11,000, and then we've got the bottom of the third there, so then we'll go back and test that again. Okay, so we could be spending some time here, and in fact what I'll just do here is I'll just bring back some old memories of when we shorted the Dow Jones some time ago in the 2008 bear market. Just bear with me here when I find it. Right, so this was coming down in the bear market in 2008. Not to say that it's going to be as big as this, but we do need to sort of point it out in its own little way here, because it'll kind of be much the same. We've come through 11,000 here and we're coming back up, and you see how sort of complicated it is in here. So it could send us long, it could send us short, it will just basically chop us up. But what we're looking for here, either way, you know, even if the market went back up from here, if we got really nice support on here, then we'll be scaling in long here. So we use the levels to trade and the Elliott wave to help us with the direction. But when it comes to putting money on the table, then the levels become more important than the wave count. So we could see here that in this is what we'll be looking for. So at the 11,500 here, we could see that, you know, not at any of these stages here had actually support been found. It could have been there, but then it failed there. So then it's come down through here. I know it's easy in hindsight, but this is what we'll be sort of looking for. It had sort of support, but it dropped through, then it came back up and sort of failed there. So now it was sort of spending more time under it, and we even had this check down through here and back up, and I remember that. So checking once again, and then it falls away from here. So in one way or another, this is what we'll be looking for here. We'll be looking for a corrective rally, and we'll be looking for any weakness in that and looking to scale in. And yes, we could get positions above the level, and we could get positions below the level and sort of ride that out as well. So it's that locking under the medium level here, 11,500, is what we'll be looking for. Okay, it will probably not be this big because this market's come down. The market currently has come down much faster than what this market is doing here. This was a bit of a slow process down until, of course, it got to this part here. But not to say we're going to get that either. We're just looking to deal with this situation at 11,500. Okay, all the markets are pretty much the same in their wave count, so I don't need to go into a lot of detail. It's the same sort of process. 1,200 here on the S&P 500 is the 1 hour chart. So these little numbers here can come down to here, be the fourth and the fifth here. So, you know, once again, get that corrective pattern across there. Yeah, and the same with the UK market as well. You see that it's got the same sort of patterns through here. The UK market, you know, this is into minor group 1 here, 100, 200, and 300. What you see here is not what you're going to get here. Okay, so all of this little area in here I've mapped that out there for you a little bit. Of course, that can come down to here now. That fourth wave, if probably that little dude there, will come down for the third wave. There'll be a fourth, and there'll be the fifth. So there's going to be a lot of bouncing in here, because this is where all the orders will sit at these whole numbers here, 100, 200, and 300. They'll sit there. So not going to be easy through there. But the long-term plan is to hold short and add under the 5,000. Certainly reduce through these ones here if that's the case, or even get completely out as this happens through here and wait for the 5 to be the resistance here. But it's sort of nice to leave a little bit in there. And it's the same with our market as well. It's the same. This is the SPY here, same pattern. We're at 4, medium level 4 there, and we'll get our bounces from there, and we'll drill in there a bit closer. But just be aware that we're looking for the bounce off the 4, and we're looking for 2 series of fourth waves here. There's still one missing in here, but I'll map this out a bit clearer through here. But I'll just say that it's not going to be easy through here. It's going to be choppy through here. Yeah. So just shorter trading ranges. If you're a normal sort of day trader, intraday trader, then you'll just continue to use the sub levels and not make any difference. If you're hedging a portfolio, then you would hold through this. But realize that would be we could come we could come back up into this area here, so you'd have a fair whack to hold there. But we'll talk about more about that. The support's also coming in from the medium level in base metals as well. As you can see here, we've been talking about copper falling out of bed from up here, and realizing that it would eventually take over this top here, which would create overlapping wave structures. And now we're looking for 5 waves down. So there'd be a 1, 2 in here. There'd be the third wave in here. So we're going to expect, from 410, from 420 down to the 400 here and below, it's going to be supported, basically, and this support here is going to come in and support not only our market, but the Shanghai markets will be the same there. Also our currency as well at 105, so that's going to play its part there as well. So there is that deep support in the market, and that's why what you see here in terms of a move here is not what you're going to get here. Sure, look, I could be wrong. I just work with probabilities, and just pointing out that a lot of people get the pictures wrong, and also get their timing wrong, either too early or miles too late, and you need to sort of adjust your thinking in this. It doesn't matter how smart you are. The markets are what they are, and you need to be sort of humble and observant and work with them. The gold is pretty much doing what we sort of expected it to do at the medium level here. Certainly an odd number, the 1650 here, but it is a medium level, and you'll see this in stock as well. And look, it's just doing everything that it's supposed to be doing. Now, one thing that that wasn't quite sort of sure of when it comes to corrections of the weakest link in Elliott, because they can just double in size and build on each other. But this move down through here could just be the A wave, then the B wave, and then a C wave coming down through here. We did draw this sort of thing here because I thought that's probably what would happen, but it's still possible for the C wave to come down through here. But I think that's the C wave all squashed up in here. I've seen it before. It's nothing sort of new. So we can just push up from here. So this is subgroup 2 here. So we could say that, well, I'd normally say that if the 72 becomes support, then you're free to sort of go to the upside. But you could probably move in a bit earlier than that. If the first level in subgroup 2 here, the 65, becomes support, nice, not just trading above it like that, but come back and test it and then move up. So that's what you'd be looking for here. Fine, you can move up through there. Yeah, once you've got support on 72, though, you still need to keep the stop at 63 because you want to keep under this level as well here. So 7s and 3s are good numbers to have stops on long trades. Okay, the oil following stock, and just as you'll see the same picture here. So I haven't put the little wave counts on it, but same thing again, the third wave down through here, and the fourth wave pushing up through here. In terms of actually just having a little sort of look at this as such here, we can look at it like this, and I think this is the A wave to here, the B wave to here, and we're looking at the C wave going up through here. This line through here is really the same distance as the A wave here, because ABCs can have equality in their structures, more so in flat corrections, but anyway, we'll see how we go. You know that the level here is the 85 here. That's got 80 in. It's just the same basic sort of thing, the 1, 2, 3, 5, and 8, and you can see that playing out through here. And yeah, 8's a profit-taking number, and that's bids are being hit. We'll see, we're looking for 5 waves up through here. It's a retest of the 90. That's what it's all about. It's retesting the 90. Will it get there? I don't know. But we are looking for a 3-wave correction within this here, so we'll see how we go. But we're looking for weakness in up here to re-short, and if it doesn't go back up, then it goes from here, then under the 85 you can short there. Now, and just the real sort of important little level in here is the 86.50. Okay, it's the 50% point between these two levels here. I call it a 65 because of the 6 and the 50 and the 50, the 65. But look, as you can see, it's playing a part there. So, you know, if this fails from here and that becomes the resistance here, then by all means, if it's jammed up under there and can't get back up, then look to scale in from that position. But looking for a 5th wave to come further down, but also coming into 80 as well. Is a major trading level, and 83, 82, and 81 will act as a filter, and there'll be orders sitting there, so the market will bounce around. So be aware of that and accommodate that within your trading, either of taking money at those numbers or standing back and accommodating for the larger move down, because you'd want to see this market trapped under the 80 at some stage, and that's what we'll be looking for there. Now, the US dollar, even if you don't trade currencies, it's still important to have a grip on. Now, there's a good pattern for the upside. There's also still probability of downside as well. So I think that don't worry about all the little labels on this particular chart, but I think what the best thing to do here is just to work with the 75. Okay, so in that case of working with the 75, we've seen this market push up through here, and it had the overshoot pattern rather than the classic trading levels pattern. So the overshoot pattern is pretty simple in terms that, yes, it didn't stop here, it went up here further. So the distance that it overshoots is the distance that it comes back. So if we sort of drill in there a little bit, so 75 is the line in the sand, and this is also the 50 and 60% retracement level from the last swing coming down as well. So it's important. If on the bearish side, it's important. Now this move coming down through here, the distance it was above, the distance below is going to bring it into around the 74.40, I think. So really, you know, the 74.30 and the 50 is going to be important. But let's just see how we go. So we've had this first shoot over here, the overshoot. It's come back down through here. If it goes back up here again and then swings across here and eventually finds support on the 75, then we'll go long from that point. Make no mistake about it. And then we'll be short on the euro through there as well. But we want that support to be on 75. We need to give it some time too, because it could come down through here, then go back up and shoot above the 75, and then come back down and then lock under there. You know, lock under there and then lock under here, and then we'll be to the downside there. So we need to allow the market now to unfold through here, but we knew that even when this was coming up through here the other day, we could probably count 5 waves up there, no problems. So we knew that it would come back out and retest here, but because it didn't stop here, we expect it to come lower. And anyway, we'll just see. We need down to here somewhere, then up here, back down, and then back up through here. So, but anyway, if that finds support on 75, we'll be long, and that will be a great trade to the upside. If not, well, then we'll be looking for further to the downside, and we'll use the 72 and the 65 to trigger those, and we'll be heading further down. And then that would sum up the case for the euro as well, in what direction that is taking. Yeah, so with the euro, as you know, the main points here are that the 140 is support and the 144 is resistance there. And yeah, so that's the outer shell of it all. Then we've got this channel coming through here, and the channel support and channel resistance through here. We've also had this larger channel coming through here as topping out there. So I was sort of looking at this structure here this morning, and it seems to be an impulse wave with a third wave in the middle here. So if it, we'll have trouble at the 143 there, but if it has trouble and eventually pushes up here for a fifth wave, then we can look at that being a wave 1 and a wave 2 back to here, and that would mean that the US dollar index is bearish. So once again, don't take too much notice of all of this. But if this finds support on the 144 eventually, then we'll be definitely looking to the upside there. But we'll also be looking for that earlier than that. But at the same time, this can fail through here. All these moves down here can be viewed as 5 waves down through here. So all these moves here can be corrective moves up through here. This can be corrective, but it's also got a slight tinge of bullishness through here of an impulse wave. So there is a slim chance that this can turn into an impulse wave for wave 1 and back for wave 2 and then move up from there. So that is certainly on the cards, but we'll see how we go. This has been a corrective move through here, and it's still sort of unfolding that. So there's too many unknowns here. So we just need more time with, in my view, of the US dollar index and the euro. The euro on a more sort of subtle note through here. You can see that coming up to the 143 here, this is going to struggle here, and this is the supporting region. We need it to stay within the support here. If it can push up through there and find support up the on the Monday, then all great. But you want support on the 43, and then as it develops support through the 10, the 20, and the 30. So you trade from this 143 to the 143.30, get out, and there'll be a correction across here. If the correction eventually finds support, then you can get back in, and you can trade up to the midpoint, get out, then get back in, or reduce and get back in, and so forth. So that's the way that you'd go to the long side, but you need that on there first, and there would be obviously selling pressure at that point there. If the 72 becomes resistance here, then you can use the 65 as a trigger, and then the midpoint here, the 50, as resistance here to look to add, and we'll be going to the downside. So it's just really a matter of trading the levels, and opinions can get you into trouble. So the Australian dollar here, much the same as all the stock that we've just been looking at in their wave counts as well. So we've got down for 1, back for 2, and then we've got the third wave coming down. The third wave, as you can see here, will be the 1, the 2, the 3, the 4, and the 5. But we'll be looking for a larger fourth wave in here, and then a fifth wave down. So we'll be looking at the fifth wave down to the 103 here. We just need to have a better understanding of that wave 4 there. And this is the wave 4 here. This is a 4-minute chart. So you can see that it's a little bit different here. So we've got, this is the bottom of a third wave here, and this is a fourth wave here. So this is what we could get on the S&P, the SPY basically, and the Dow and so forth. So all this messy pattern here is what we can expect. So we can expect something like this, like that. That's a fourth wave, and that's a fifth wave coming down here. So that's the finish of that. So this is a larger fourth wave starting now. So we should see this pattern that we've seen here on a small 4-minute chart here. We should see much the same here in a bigger pattern over here. But once again, you can see the 105 here is resistance here. So you wouldn't want to go long at that stage there. All the trading that you need to be doing needs to be in sort of sub-level territory in here. So just risk 3 points to get 7 points, so to speak, and be on the right side of certain groups of numbers. So if there's support on the 30, then you could be long to the midpoint, and the same up here as well. You wouldn't go long unless 72 was the support here. They're just natural things. Okay, so that's sort of enough, really. You get the sort of general gist of things, that there is support across the markets. What we've seen is not what we're going to get. We can expect fourth waves. We can expect complications, and we need to come to terms of how we're going to deal with these, and we'll be looking at the ASX markets for that. Any long-term hedging positions can, on the short, on the ASX, have a look at the quarterly robo method and the yearly robo method as well, if you need to go into any sort of protection there. If you're going to be shorting stock to protect your portfolio, look at some of the stocks that haven't moved yet, because they're followers, and they will move in their own time. Where the ones that have already the leaders, then they would be the first ones to turn and go back up. Okay, so the ones that have moved down the least are the ones that you want to short. Alrighty, if you need a hand, just flick us an email. Good morning and good luck.